One of the big complaints about the CFPB going away is that they were the main entity that was regulating for RESPA. And a lot of people are saying, well, with them gone, now the enforcement of RESPA violations is really being pushed back to a state level. Matter of fact, I would argue that what the Trump administration would want to see here, and this is what it feels like to me with this whole repeal of the CFPB, is that they want to push it back to the state level, right? I mean, he's done that with other things. He did that with the Department of Education, for example, right? Like, we're going to basically shut down the Department of Education, and we're let the states handle that. So this is, not, out of sorts, if you will, for kind of the mindset of the Trump administration. And it feels like that's kind of what they're doing here is, the feedback, and you heard Elon Musk talk about this, you've heard Trump say it, is that the CFPB is just a redundant organization that's unnecessary. And so, again, watch my other video if you want my opinion on that. But the point being is that if this is shifting more towards state regulators, is that a good thing or a bad thing? Well, let's talk about that for a second. I mean, the challenge with it being pushed to a state level is now you have 50 different interpretations of these rules, right? At least with the CFPB had these guidance documents out there on many topics. It was like, okay, it's very clear. We know what the CFPB is looking for. They've provided guidance documents that tell us. So when it's at a state level, now all of a sudden this is open to interpretation. And I'll give you an example of one that I was reading that I thought was very interesting. There was one state, didn't say which state, but one state that interpreted loan officer compensation rules to read that a branch manager, or any manager for that matter, could not be paid override based on, and get paid basis points on override, which is a very common practice in our industry, right? So a loan officer makes certain amount of commission. A branch manager might get, a couple basis points of override on that production. That's how the branch manager or a regional manager is compensated. Very standard practice all across our industry. And yet we have a state regulator saying, well, our interpretation of loan officer compensation rules say that you can't pay override to a manager who was not involved in the origination of that loan. Now, can you imagine the impact of that? So it's items like that could make it very difficult if we see the CFPB continue to be shuttered and more of this responsibility pushed back at a state level. You just get these different interpretations. And like I've mentioned in the past, some states are really good, and do a great job, and other states, maybe not so much. Maybe they just don't do a lot of enforcement at all. Maybe they don't have the budget for it. Maybe they don't make it a priority. And so bad actors kind of can slide beneath the radar. But here is one of the other potential benefits, in my opinion, of it being shifted back to the state level, which is the small players, right? The small companies, like even a small, independent brokerage or a small independent mortgage bank that right now under the CFPB, let's be honest, they kind of fly under the radar, right? The CFPB is pretty well known for being focused on the largest lending institutions because obviously they have the financial wherewithal to deal with the level of audit and review, because you got to pay for all that the CFPB might bring. But they also have the ability to deal with, any action that may come from that. They can afford to pay the fines or to settle with the CFPB. And so they have deep pockets, let's just call it what it is. And they have been a target. But then there's a lot of these smaller players, state, companies that are maybe only in one or two states, or small independent companies that maybe are doing things that are not as compliant, and they're doing it because they're not worried about the CFPB. So if you start seeing RESPA compliance and all these other enforcement being pushed back to the state level, well, then they're going to have to heighten their review. And it's typically the state regulators that would be looking into these smaller players. So in some ways, that might level the playing field. It might take some of the more well-known things that are happening with small companies that I think a lot of people know might be happening, but they haven't really been enforced. perhaps, that would be a benefit of taking some of that away and pushing it back to the state level, because it might make everybody be a little bit more compliant in their activities.